you do negotiate on price and saying that this accountant you're spending way too much. However, at the end of the day, you'd be spending more on paying taxes. So that's why you always need to get the best accountant to be working with them.
It goes back to benefit and cost again.
When you're a business owner, even if you're making nothing, it's important to at least consult an accountant because there's still tax obligations. Unlike with with an employee, when you're yourself, with an individual, there are no tax implications if you make nothing. You don't have to submit.
Hello everybody, you are tuned into Non-Wealth. Today we have a special guest and I know that tons of value will be put out today.
Of course. So if you don't actually come to our event, you're going to be missing out a whole lot. So Natasha is going to be telling us about tax. Natasha, hello.
Hi, how are you guys?
Good, thanks. How are you?
Very good, thank you. Very good. Just a long day, but very good. I know that tax is a bit of a scary topic for most people. So I really try to make sure that people are not afraid to talk about something that they feel unconfident in, and also that they feel like there's a safe space for them to actually ask difficult questions. And most of the times, they're pretty simple answers to these questions.
Natasha, before we even hit it up, right, I would like to understand why did you choose accounting and focusing specifically on tax? I'm really interested in understanding what was your push factor.
So I didn't want to. I actually wanted to get into a medical space, but my dad had an accounting firm and they needed help. And so I ended up finding myself going through to the accounting firm when I was 18 and running it within 6 months. And then I obviously started studying it. And from there, I ended up having a case of my client. It was very strange, but their previous accountant had unfortunately passed on. And as a result, they had made a mistake on their tax return and there was nobody else. Obviously, I'm their accountant now. And I ended up helping them with that case. I think that first case, I brought down their tax payable from 800,000 to 20,000 Rand. So that was something that I thought, oh, okay, well, this is interesting. And this is something that I like doing. And finally, that season of my life, I just got a whole bunch of tax audit cases that I had to deal with, as small as that one, as big as my largest case was 75 million Rand. And then I got it down to 25 million. So these were just interesting things that I didn't know that I could do. And then I obviously, in getting into these audits, I have to be able to substantiate what I'm saying. I have to be able to know the tax law to the point that I'm taking it up with SARS themselves. So that's how I actually got into it. It wasn't something intentional. It was just something I kind of went with. And I realized I was good at and something that I ultimately ended up enjoying.
Accounting found you.
Exactly.
Natasha, I thought that I would ask you this, right? But I was like, maybe I shouldn't. But since you did bring it up, right? What was the biggest save that you've done for an individual or a company in terms of tax?
It would have to be that 75 million to 25 million. But the most, I would say, rewarding one was of a client who came to me after knowing me for 6 months. And I was just like, okay, giving advice here and there. It was actually a friend of mine. And it was 6 months of me just kind of watching by the byline, and they had their own accountant. I was like, okay. And then one day they just showed me their books and I was like, I kind of lost it. I was like, what is going on here? That's as loud as I get. But I was like, what is going on here? This is absolutely ridiculous. You're really overpaying in taxes. And I think that client, even just this month, they got 200,000 Rand back from SARS. Last year, it was another 150,000 Rand. And there's still another 400,000 Rand outstanding. That's still to come their way. So I think that's like the most rewarding one because that's a friend of mine. And I'm like, I'm so sorry you had to overpay like all these years. But yeah, that was like, I feel like that's a big one.
That's one of the most important things that we miss as entrepreneurs, right? Whenever we're going into becoming an entrepreneur, we're always thinking that how do I save, how do I save, how do I save? And now we end up overpaying or overspending on tax. So what I would like to know is that how soon should someone have an accountant in their team?
So it's in varying degrees. I definitely think anybody who makes money should have a financial planner, should have an accountant. You need to have some sort of a plan and some sort of knowledge. So consult with an accountant, 30 minutes once a year. It's not a biggie. Just make sure that you're on the right track. When you're a business owner, even if you're making nothing, it's important to at least consult an accountant because there's still tax obligations. Unlike with a person, with an employee, when you're yourself, with an individual, there are no tax implications if you make nothing. You don't have to submit. But as a business, you do. You need to be able to submit, and if you don't, you incur penalties. It's a whole spiel. So you need to be able to have language around a new venture that you're taking. And if you're not prepared for that, it's best to then not register a company. And this is why I say for freelancers and kind of people who are just trying out something, stick to a sole proprietor, which is essentially your own tax type, rather than registering a company with CIPC, because it's easy to register a company with CIPC. You're going to pay, it's going to take literally an hour, right? And it's going to come like immediately. I registered one last week, it came like this. But the problem is that there are tax returns that are due every 6 months, and people just don't know how to do it. They don't know where. The time comes, they're getting SMSs from SARS, emails from SARS. They don't even have an e-filing profile. So all of these types of things are very important. You should have someone on your team or someone you can talk to the moment you register a company or the moment you start making money as an individual.
It's I'm sorry. It's just a follow up, right? So if you're saying that someone should,
This happens a lot. It happens a lot.
so, so if you're saying someone should register as a sole proprietor, right? When do we do that transition from being a sole trader into becoming a company? Because I do also understand that somehow it does become a bit heavy in terms of taxes when you're looking at a sole trader. So when do you do that transition?
Okay, so sole proprietors, you don't register for them. That's the difference. You can just modify your tax return and submit as a sole proprietor, but you don't have to register or deregister when you're a sole proprietor. The transition comes when the person is ready, right? So if you're ready to take on the admin and the responsibility of owning a company, go for it. You don't have to start off as a sole proprietor. I think that a lot of people just don't know what it will take. If you're trading, if you have money, you need to do financial statements. This costs because you need them signed off by an accredited person, an accredited accountant. So if you don't have an accredited accountant signing that off, or you don't have the budget for that, that becomes a bit of a problem. You need to be able to submit your tax returns. Usually people don't know how to navigate the e-filing system. You're probably going to have to pay for someone to help you do that. And then you need, if you get selected for an audit or something, you need to be able to substantiate that, have the language for that. And you're probably going to need someone qualified or well versed in that. And going back to the financial statements, you need to know what's allowable, what's not allowable. There's something called ring fencing. It's a bit of admin that I think people don't budget for monetarily, time wise, and just like that they actually have to do it. So that's the biggest thing that I would suggest whenever you're ready to transition from that, because it comes with a benefit, but it also comes with a cost. Right. So the cost of it is a larger responsibility. You need to be able to report and record. And I don't think a lot of people know that you have to do that.
I'm so happy that you talked about that, right? The benefit versus the cost. The reason why I'm going to say that, I'm going to expose one of us. So one of us was holding on to a student achiever, because of the benefits. I think you can tell who is that person. I think you can tell by now. So they were looking at the benefits, right? And now not ignoring the cost in terms of if I'm going to be getting a credit card and also if I'm going to be registering my business, what cost or benefit does that come with? Because at the end of the day, here's the conversation that we need to start having, that as much as I'm saving, and this is a message that I really want to put out there, as much as I'm saving right now, let's say if I'm under this type of registration and I'm saving, and now how is that ultimately going to affect my ultimate goal? If I'm saying that I want to have X amount of properties at X amount of year, or if I want to push the business credit at X amount in 5 years, and then I'm focusing on saving, that's going to come back to haunt me. The reason why I don't like that a lot is because it even affects your business. Because now you find people out there that will be like, you know what, I'm running my business underground. So I'm getting cash as a property investor in terms of rental, and I'm focusing on all my expenses. So I don't have to pay an accountant. However, if we're really looking at the bigger scheme of things in terms of how am I going to grow, it does come back to you because you are saving right now, but the real question is at the cost of what?
Yeah, I always say that when when people try to debate my fees, and I think that was the biggest thing with my friends because they tried to debate my fees, and I was like, you pay for what you get, right? It pays to pay, and if you're paying 400 rand, well, you're going to be overpaying 200,000 rand in taxes. So what is actually really happening? Whereas if you pay me, you're saving 200 400,000 rand in taxes, which I don't think is a bad trade-off, right? So I see that happening a lot. I see a lot of accountants kind of lowering their feet into the ground, and the quality of work is compromised because you simply cannot give the right amount of attention to something that is not rewarding you at that level. So the cost trade-off is once people get it, they get it, and they're able to actually direct their funds where they feel will give them the best return.
Yeah, I think just to wrap it up from what you're saying, also what I was saying is that I've also learned what really changed the game for me is when I understood pay to play. If you really want to play the big boys league, you ultimately have to pay. However, at the same time, it should be aligned with the service that you're getting. That service should be top notch to an extent whereby if I'm looking at this pay cut, it's not even negotiable.
So why is it really important for you to have that conversation? I know we touched on it a bit earlier on when we said that you need to have an accountant on your team, but is it really important for someone to have an accountant that's actually active, or should he just do it as a once-off thing that happens at the end of the year or at the end of the filing season?
It's very hard to prescribe. It depends on the goals of the person who is involved, right? And the frequency of certain tax events. So an accountant can come in and they can look at what you're doing and they can say, well, according to the act, this is a template of how you can run your business and how you can move your expenses and how you can engage in your finances. Depending on the level of activity, it might call for, well, there are different things coming up, new expenses coming up, there are changes to the template that you've given me. Please, can you take a look at this? We usually come in on a retainer client basis if we find that these clients need particular attention, right? So if you're a business and you have kind of transactions happening monthly and you want someone to kind of maybe even run the expenses or take a look at that, then we can come in and help with that. But if you're just the person who Jan to December looks pretty much the same, the expenses are pretty much the same, then we generally come in maybe once a year, twice a year, give you a template on how to engage, rules of engagement, you run with that game plan and you get the results, right? Because at the end of the year, like I always say, you shouldn't get to your tax season and be like, what, I didn't even hopeful, not knowing. You should be able to say, well, if I'm according to this template, I should be paying between this and this. I should be receiving a refund between this and this because I've made use of these different types of rebates or incentives or things like that. But it really depends on how much the person is kind of going about in their life.
Okay, awesome. Awesome. No, thanks for that insight, right? To me, it's quite clear that we need an accountant as soon as we register the business, right? And with that being said, we already can tell who is a good accountant versus a bad accountant. Hint, hint, 75 to 25. If you haven't got it, it's bad, man. So there's something that I'd like to ask you, right, Natasha, especially when it comes to whether it's a property investor or somebody who started their business, because we truly believe in getting somebody who's proactive to the market. So we're talking about the new laws that are instilled and how to make sure that our business is adapting to this changing environment. So how would you say, if somebody out there is looking at this video and they want to understand when they're sitting with someone who's an accountant, how can they tell that is this person good or not?
That's a very difficult question, right? I think the proof is in the pudding. It's very hard because unless you have a understanding of the tax laws, it's difficult to see that you're not being given options. So everything might be correct, you might be compliant, but you not might not be optimized, which is a lot of clients have come to me just simply because they either just feel like they're paying too much in tax, or they've just come to me and taken a look at their stuff and said, well, you could actually improve on this, and then they switch over to me. So I would say it's like a doctor. Get a few opinions and see, like, I know it's a bit costly in the beginning, but get a few opinions to see if you're on the right page, if this person's the right fit for you. And this is also why I produce the content I produce. It's not actually to answer questions, it's to help people have better questions. So when they do sit in front of their tax practitioner, their accountant, they can start probing and asking more pointed questions because they've seen videos that speak directly to their case. And they could say, well, I've seen that, I have this question, can you help me with this? And based off of that response, you can kind of gauge to see if this accountant is the right fit. But it's very difficult. Like I think about it, like I went to go get my cholesterol taken today, and it was a little bit on the high side. And I have a bit of a inherent distrust when it comes to medical things. I watch too much of this, and maybe that's why I wanted to go into the health industry, to kind of just do it myself type of thing. But I got that, and I always get second opinions, always. And one of the things that was said was, well, there's good cholesterol, there's bad cholesterol. What that test does is it just kind of tests all of the cholesterol. And when I spoke to the lady, I was like, well, with this, what are the remedies? Like, no, you have to get on medication sometimes, blah, 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 in very hectic cases. And I was like, does it cause a dependency? And she's like, yeah, but, and I was like, that's hectic, altering your body off of the back of this consultation that I had. That's the implication. And I think it's the same thing. So if you don't have a variety of data points, you don't have better questions to ask. Because I could have just been like, oh my gosh, high cholesterol, give me those pills, and for life, I've altered my body. It's the same thing with your taxes. If you don't go around kind of figuring out, is there another way? What more can I learn about this? If you're not naturally inquisitive about it, you might find yourself under optimized and potentially mismanaged.
It's the same as a contractor. We've had a bad contractor, and the only time you'll know it's at the end of the project, at the end of the year, even with what we're discussing, that once you know it's end of the year, you'll be like, but this accountant, no, not this one.
And with contractors, it's even worse because sometimes you even find out while you're still working. I guess it's also the same with accountants, that you might have used one accountant and now you're like, let me get a second opinion. And you give them your books only to find out that you would have actually paid more than what you did. And what you spoke about earlier on about the price points, sometimes you do negotiate on price and saying that this accountant you're spending way too much. However, at the end of the day, you'd be spending more on paying taxes. So that's why you always need to get the best accountant to actually be working with them.
It goes back to benefit and cost again.
You also got to look market related. Some people charge absolutely unmarket related things, and you just can't reduce that cost. I don't even negotiate anymore. I think because I put out a lot of free content, the information is free, but the implementation is paid for. And that is something that I think more accountants, it's a very crowded space currently. And I think that that's why people, and also because in South Africa, we have a very interesting relationship with taxes where we don't really want to look at it. We kind of want to avoid it. I think maybe that's universal, but we have the option. In the US, the IRS is on your neck, so you have to kind of figure out what's going on. But in South Africa, we have the luxury of inefficiency, so you end up having a case where you just ignore it, and you can ignore it, but it comes back in some cases. So yeah.
So Natasha, tell me, right, what's the similar mistakes that a lot of people do, especially as property investors, in terms of 5 years later, when you do look at their books, you find out that they've been doing the same mistake throughout the whole 5 years, and it doesn't really happen with one individual. It happens with multiple things, so that people can really understand if they are in a situation whereby they're putting themselves on the bad side or the good side of the tax law.
People don't even know what a rental schedule is. So if you are a property investor and you have rental properties, most people don't keep rental schedules. They kind of just think that when they have a property manager, everything is taken care of. And maybe that is an avenue that property managers should get into, in a sense that with your medical aid, you get a medical aid certificate at the end of the year. That's for tax purposes. Maybe property managers should give them rental schedules at the end of the year for tax purposes. And they can charge a little bit extra on that, just to make sure that they actually have they have that going on, because it is a direct assault, or it's a direct threat on the longevity of that. Because if they fail to do that, SARS can then go through, if they decide to charge them interest and penalties and you don't have the money, SARS can go and take that property that belongs to you and just that 100,000 rand, and they've sorted, right? So it's very important that people who do own rental property understand the tax admin implication. They should maybe even look at understanding how to submit those tax things, because a lot of people, maybe they only have 2 or 3 rental properties. It's not a big deal, but you should be able to submit and declare that on your taxes. I had a case now with the client who got audited. They actually made a rental loss because they did renovations, improvements, repairs, and so forth. And the SARS ended up doing a final demand of 40,000. They audited him. He didn't submit on time. He ignored it for a while, actually. And now we have to go and do a dispute and this whole hullabaloo of things, because he didn't have rental schedules and just didn't submit those supporting documents, where he could have even got a refund.
Sure. Natasha, you spoke about something, right? Rental schedules, right? For those people who don't really understand what a rental schedule is, could you please just go deeper into that? What is a rental schedule?
It's essentially a record of your income and your expenses. I actually have a template on my website that people can go and purchase and have it to download it. But it's essentially your income and your expenses recorded in a way that is approved by SARS. And my template actually has the different examples of it. So it's a drop down, it's on Excel, it's a drop down menu. You can actually go and click when you're capturing date, invoice number, whatever it is, and then click to say, well, this is the type of expense in the format that SARS can then accept. And then they essentially do your tax calculation based off of that. Yeah,
we'll also
that's
include
the format that we get when they send us those things to submit on behalf of our clients. So we modified it a little bit to make it more user-friendly, because it has a bit of accounting jargon sometimes. So we modified it a little bit more to make sure that it is accepted. It's at an acceptable standard for SARS to approve.
So I wanted to speak about transfer duty, just the basics, right? When it comes to transfer duty versus estate duty, what is the difference between the two?
So the transfer duty, the estate duty in terms of on a deceased, so estate duty tax is a 20% tax that happens with the transfer of an estate for the deceased party to whomever it's going to. There is an exclusion where if you are the spouse married in community of property, you don't pay that 20%. But if you are, inheriting it as someone else, then you do have to pay the 20%. And a lot of people don't know this, so they don't really plan for this. And you might find that you might end up selling part of the estate just to cover the cost of the estate. This should go up to about 30 million. After that, it's about 25% that you're paying on that. The transfer duty is just when you are moving property from one owner to another owner, and then you're paying on a sliding scale the transfer duty costs, which will be calculated. It stands now about the first million, you don't have to pay tax, but up more than that, you're going to start paying your transfer duty tax. So that's the only thing, and that's why the law does favor marriage, just in terms of the estate duty. Because, like I say, it gets waived. But yeah, up to a certain percentage, the percentage goes up.
We need to be aware, especially when it comes to the percentages, because I know with other new developments, instead of them charging you the transfer duty, they charge you a percentage on VAT. So now sometimes somebody might be saying that, you know what, I feel as if paying the transfer duty is cheaper than VAT, only to find out that VAT was cheaper than transfer duty. So hence it goes back to consulting an expert who will assist you. So we will put Natasha's link below so that you can have a conversation with her and how she can help you with the services. Remember, pay to play. Information is free, but implementation comes at a price.
Natasha, do you have any last closing words?
No, I had a great time today. I'm really glad that you guys are informing, your client base, you're following your audience. So I really had a great time. And I'm always available to chat. And thank you for having me.
Thank you for your time and see you at the event, man. Next week, Saturday, we are on.